Welcome to Seminars on Demand. I'm Don Henderson, and in this session we're going to focus on the 4 ways to grow your business. You know, sometimes we make this stuff too complicated. If you think about it, there are basically only 4 ways to grow your business. Number 1, and the most obvious, is to add more customers. When most business owners think about growing their business, they think about getting more customers. They believe that if they could afford to do a major advertising program, they would get a lot more customers and their problems would be over. This frequently is the worst way to go about growing a business. Advertising is expensive and often will not work at all for many small companies. If you have an existing customer base, usually the best way to grow your business is to look inside your company and grow it from the inside out. You'll see how this works as we look at the other ways to grow your business. So the first way is to add more customers. The second way is to increase the frequency your customers do business with you. If they buy from you 3 times a year and you can increase that to 4, this alone can grow your business tremendously. If they buy from you once a year or once in a lifetime, any time you can increase the frequency, this can be a very effective way to grow your business. So number 2 is to increase the frequency your customers do business with you. The third way is to increase the average value of a sale. If the average sale is now $18 and you can increase that to $21, this can have a significant impact on the growth of your business. So number 3 is to increase the average value of a sale. The fourth way is to increase the effectiveness of the processes in your business. If you can increase the efficiency or the effectiveness of how you do what you do, this too can yield dramatic results. So the fourth and final way is to increase the effectiveness of the processes in your business. I've found that the best way to learn about the 4 ways to grow your business is to look at some real-world situations. Let's look at a flower shop owned by Bill and Mary Cannon. Their sales were $196,000 last year, but their profits were only $8,000. At the beginning of the year, they had approximately 1,000 customers that had bought from them in the previous 12 months. The company that I'm talking about here is a real company that I worked with. The only change is that I have rounded the numbers so they are easier to talk about, and I'm using different names. By going through their sales tickets, Bill and Mary were able to determine that about 200 new people bought from them last year that had not been customers in years past. That meant that they had attracted about 20% new customers. But since their sales volume stayed about the same, we concluded that they must have lost about the same number of customers as they had attracted. Does that make sense? They were attracting 20% new customers, but their sales volume was staying the same, so they must be losing about 20% of their customers each year. Now let's look at the first way of growing your business, adding new customers. I asked Bill and Mary what they were currently doing to attract new customers. They said that they had a Yellow Page ad that cost them $500 per month, and that they ran newspaper ads during special occasions at a cost of around $5,000 per year. Here was my question to Bill and Mary. What are you spending per year on programs to nurture your existing customers, to show them how important they are to you and to keep them coming back? What do you think Bill and Mary's answer was? What would be your answer? Well, Bill and Mary's answer was nothing. That's right, nothing. They were spending $11,000 per year to attract new customers, but they were not spending a penny on programs to nurture their existing customers and keep them coming back. So here was my next question to Bill and Mary. How much do you think you could improve this percentage of lost customers if you were to implement programs throughout the year to nurture your existing customers? It might be special sales where they only invite their existing customers. It might be a follow-up phone call to make sure that the customer was happy with their floral arrangement, or any other way of saying to the customer, "You are important to us." Bill and Mary thought they could cut their lost customers' percentage in half if they really tried. Me being a CPA, I was a little more conservative and suggested that they might reduce lost customers from 20% down to 15%. Let's look at the impact this would have on their company if they were able to do just that. At the end of the next year, Bill and Mary would have increased their customer base by the 50 customers they were able to retain. Profits would increase $4,900 per year, and this would happen without them spending an additional penny on advertising to attract more new customers. And all of this would happen if they were able to keep just 1 in 4 of the customers that they are currently losing each year. Now let's look at the frequency the customer buys from them. Bill and Mary were able to determine that their customers bought from them an average of 7 times per year. They got at this number by dividing their total number of sales tickets last year, 7,000, by their total number of customers, 1,000. How you go about getting this can be different for every company. You just have to use the records that are available and back into what you need. Here was my question for Bill and Mary. What are some things you might do to get your existing customers to buy from you more times each year? They discussed this with their team members, and one of their employees suggested they could set up a reminder service. Their customers could tell them their anniversary dates, birthdays, and other dates that might be important to them. The team could enter these dates into a contact management software such as ACT, and every week pull up the upcoming special dates and notify their customers. And while they had the customer on the phone, they could offer suggestions for appropriate gifts. They could even remind their customers what they had gotten for that special person last year. My next question to Bill and Mary was, what do you think you could get that transaction frequency up to if you implemented programs such as a reminder service that encouraged your customers to come back more often? They believed that they could get their customers to buy from them 3 more times per year. I suggested that we take a more conservative approach. What do you think would happen if they could get their customers to buy from them just 1 more time per year? Here's what would happen. Their profits would increase an additional $14,700. Add that to the $4,900 increase that came from reducing the number of customers lost, and Bill and Mary are now taking home $19,600 more. But let's keep going. Let's see if they can apply the third way to grow their business, which is to increase the average value of a sale. My next question to Bill and Mary was, what are some ways you might increase the average value of a transaction? Again, they turned to their team members and did some brainstorming. The ideas that came out of that meeting included offering to add a helium-filled balloon to flower arrangements for festive occasions. They could suggest nicer, more expensive arrangements. They could offer to put a few cut flowers in plants to add the brilliance and color of a fresh cut flower arrangement, but the recipient would still have the more permanent plant after the fresh flowers died. Of course, my next question to Bill and Mary was, how much do you think you could increase the average value of a sale if you implemented some of these upselling and cross-selling ideas? And if you implemented them by creating a system where the customer was asked every time they placed an order. The average sale was now $28. Bill and Mary thought they could probably increase the average by $5, which would get it up to $33. Again, I used a more conservative number of $31. What do you think would be the impact on profits if they could increase their average sale just $3? Here's what would happen. Another $12,600 would be added to Bill and Mary's take-home pay. Add that to the previous $19,600 and they now have $32,200 more income per year, and this would continue year after year. This has taken their profits from the measly $8,000 per year they started out with to over $40,000. And all of this was done without spending a single dollar on additional advertising. Bill and Mary were beginning to see the light. They were able to accomplish these improvements utilizing only 3 of the 4 ways to grow your business. They actually did not increase the number of new customers coming into their business. They only reduced the number of customers they were losing each year. They increased the frequency their customers did business with them from 7 to 8 times per year. Then they increased the average sale from $28 to $31. Please grasp the power of these 3 ways. They did not invest $30,000 in a massive advertising program that would probably not have worked even if they had. They did not discount their products or services. They did not look outside of their business to grow it. They grew it from the inside out by focusing on their existing customers and doing a better job of meeting their needs and creating value for them. I'm not going to talk about the 4th way to grow your business in this seminar, the one that says increase the effectiveness of the processes in your business. While it can actually be the most effective of the 4, it takes more than an entire seminar to do it justice. I'll cover it in greater detail at a later time. But let's talk about what we've done here from a different perspective. To quote Paul Harvey, let's look at the rest of the story. You know, a going business typically sells for a multiple of earnings, which usually ranges from 3 to 7 times earnings depending on the nature of the business. This is an oversimplification, but it will effectively demonstrate the point I want to make. Let's say that Bill and Mary reach a point where they are ready to retire and sell their business. What impact would these increased profits of $32,000 per year have on the value of their business when they sell it? If we use 5 times earnings to value their business, the increase in the value would be over $150,000. And this $150,000 of increased value was created with almost no additional investment. Nor were there any great changes within Bill and Mary's business. They were able to reduce the customers they lost by 5 percentage points. They were able to get their customers to do business with them just 1 more time per year, and they were able to increase the average sale by just $3. Yet these relatively small improvements working together increased their profits by over 500%. This is the power of focusing on the 4 ways to grow your business. Now, Bill and Mary's Flower Shop is a retail business. I'm sure many of you own service companies and wonder how these different ways of growing your business might work for you. But it's usually easier to grow the profits of a service company than it is for a retail business. So let's look at Phil Blaylock and his lawn maintenance company. Phil had 50 customers at the end of last year. He does work for his customers an average of 25 times per year. This is primarily mowing their lawns 3 or 4 times per month during the growing season and then doing very little during the winter months. The average charge for mowing a lawn is $40, and Phil is taking home about $28,000 per year. But he would like to be making more. He felt he needed to get more customers. My first question to Phil was, how can you be of greater value to your existing customers? Phil was not sure, so we invited 8 of his best customers to serve on a customer advisory board so we could ask them. We got some very good feedback about what they liked about his services, as well as where they thought he could improve. He also received several suggestions of what they would like to see him add to his services. These included treating fire ant beds, replenishing pine needles around their flowers, landscaping advice, building fences and retainer walls, deck cleaning, as well as many things not even related to lawn maintenance, such as pressure washing their homes. Some of these suggestions would require that Phil get additional training or partner with another person, but some of them he could offer almost immediately if he wanted. My next question to Phil was, if you offered some of these additional services to your existing clients, preferably services that could be done in your off months, how many more times per year could you get your customers to do business with you? Phil believed that he could easily add 3 to 5 more visits per year. I suggested he use the more conservative 3 more times per year. This alone would increase Phil's profits by $6,200 annually. I then asked him if he could increase the value of what he was already doing so he could charge more for each visit. He looked at some of the services that his customers had suggested and picked out some that would take very little additional time but would increase the perceived value of his service in the minds of his customers. Things like treating fire ant beds or fluffing up the pine straw around flowers to make them look better. I asked how much more he thought he could charge for this increased value. Phil wasn't sure. He was concerned that if he went up on his prices, he would lose a lot of his customers. I told him that I understood how he felt, but there was a way to go about it so as to remove or at least minimize the risk of losing any of his customers. My suggestion to Phil was to test a price increase and its associated increase in perceived value. Phil decided to test a price increase of $10 per visit. What do you think would be the impact on Phil's profits if he were able to increase the perceived value of his services so as to justify a $10 per visit increase in his rate? The result is an additional increase in profits of $14,000. This added to the earlier $6,200, and Phil's profits have increased a total of $20,200. These two changes alone would take Phil from earning $28,000 per year to over $48,000. Phil sent the letter to his customers, explaining the price increase, and ended the letter with this statement that I had suggested. If for any reason this price increase is not acceptable with you, please let me know. You are more important to me than any price increase. He also proposed that the price increase would not take effect for 2 months to give his customers time to talk to him. You see, people are not as upset about a price increase that is going to take place 2 months in the future if you give them a chance to talk to you about it and if you give them a little time to adjust to it. Initially, Phil sent the letter to only 25% of his customers. Once he saw that they were not going to all leave him, he sent it to the rest. What do you think happened when Phil sent out his price increase letter? Here are the results. 6 of Phil's 50 customers called him or wrote a note on his bill about the price increase. Phil called each of the 6 and talked with them individually. 2 of them agreed to the price increase after Phil told them about the changes he was making. 3 of them agreed to a $5 price increase for now, and 1 was clear that he would get someone else to cut his lawn if Phil increased his price. This left the choice up to Phil as to whether he wanted to continue doing business with that customer or not. I suggested to Phil that he might want to test another price increase next year. He was so pleased at what was happening now that he could not imagine another price increase. But after he thought about it, he did say that we should talk again next year. But there is more than just increased profits that can come from growing your business by focusing on creating value for your existing customers rather than getting more customers. Think about this. For Phil to increase his income to $48,000 by attracting new customers, he would have to add 23 new customers. That is going from servicing 50 customers each week to servicing 73. For one thing, it could be difficult and expensive to attract 23 new customers. But maybe more importantly, what do you think would happen to the quality of Phil's life if he began servicing 23 more customers every week? What would happen to the time he spends with Cindy, his wife? And what would happen to the time he spends with Catherine, his 6-year-old daughter? Sometimes the greatest benefits of growing your business correctly don't even appear on your profit and loss statement. I hope this seminar has been of value to you. When you think about growing your business, don't be so quick to think about adding new customers. Look at your existing customer base and ask yourself, how can you serve these people better? How can you create additional value for them? After all, we are rewarded to the extent we create value for those we are fortunate enough to serve. Think about the 4 ways to grow your business and how they might apply in your company. If you have questions or suggestions about this seminar, or if you would like some help in implementing some of these ideas, please email us. Let us know of your success stories and your challenges as you apply the principles we talk about. Also, make suggestions of things you would like to see covered in future seminars or additional ways that we might be of value to you as you move toward mastering small business management. I'm Don Henderson, and thanks for listening.